Alright, Forex market, here we go for the second time today. That's going to be the last time for the week, Forex market. We're looking at the euro versus the pound dollar. We want to have a bit of a follow-up on an existing position. As you very well know, we've been doing really well on this with this bearish campaign. Right from the get-go, things have went pretty smooth for us. In fact, the back and forth on a very mild range here, while still sliding downwards, had been a bit of a blessing for us, because it helped us basically just take profits all across that move. Right at first, when price was consistent, we built a big size position. We just threw trades every time price went down. So we built a big size position. That's how we did it, right? And then when price was starting to skew off upwards, we just closed, we closed trades basically. And we kept going in this fashion. Basically, this is what we call scaling in, scaling out, according to the daily session, right? If it was negative, we're coming in stronger. If it's positive, we're basically taking a step back, so to speak. Anyway, we're left with, as you can see, because of this, let's say the past week or so had been on the positive note, right? So it looks like this might escalate to something much more serious. And I'm talking about technical upside correction, because if you think about it, price did not spend any serious time correcting that move, starting from right here from the top and all the way to the bottom. Right? What we've seen here are hiccups. This is not a serious technical correction, right? So we might have that now. It could be deep. It could go high, and it might even go and try to retest 90.40. Who knows? Price is really deep. That's the way it is. But let's just say that we're not willing to absorb this kind of correction just to keep the position alive, right? We have no intentions like these. So here's what we're gonna do. We're gonna start to prepare ourselves for jumping ship if necessary. And we come up with a bit of a plan here that's coming from the short-term cycle, actually coming from the 4-hour chart. Let me show you what we're dealing here with. A bit of a trading range started to develop with 1, 2, and 3. So we figured out that's probably a bit of a small-scale kind of consolidation phase, where price is either going to keep trading sideways, right, like this, in this fashion, and eventually continue to the right direction, quote unquote, you know what I mean? Or it will actually have that, it will start to actually construct that meaningful, significant technical correction, and will go deep, right? That's these are the two scenarios we see at this point. So here's what we did. We first, this is what we did. We closed in with the stop loss level to reflect a breakout here, right? In case there's going to be an explosive move, we're going to be stopped out with the last trade, basically giving back about 15% of the profit that we've been accumulated here so far, right? And we're probably gonna be watching very closely, guys. We're gonna be watching very closely, because if price is gonna be about to approach that level here, the top resistance level. Let's see what the price is here. We're talking about 88.10. Good chance we're gonna be coming back to tight the stop loss level even further and drop it to 88.50. All right, we can still leave about 40 pip from that last line of defense here. But let's see how it goes, right? We've been following up on this one for a long time now. And I just kept coming back and giving you, an update on the situation. So we're still here, right? We have a bit of, let's call it a bit of an issue, right? And let's see how this is going to be resolved. But this is pretty much the game plan for the foreseeable future. That's about that. Euro pound, Forex market. We'll be back next Monday, guys. Enjoy the weekend. Cheers.